Welcome back, ladies and gentlemen. So today's video will just be a very nice and enticing video, what you've been waiting for. Now a quick reminder, I had created a new Telegram channel whereby our community sits. It was created 3 days ago, and also our Instagram page. So kindly check on the description. I'll give you the links to the group, or rather the channel, and the Instagram page. Also, if you've not subscribed, consider subscribing because more and hot informative content is coming your way. Now in today's video, I want to talk about the strong high, weak low, and the strong low, weak high. As the name suggests, they come in pairs, and you are about to see whatever I'll be talking about in the charts in a few. Now, let me begin with strong high, weak low. Then I flip everything together so that you can be able to see strong low and weak high. Now, consider this example. The market was trending. Let me use 100. So the market was in a trending environment, the upside maybe. Then it took out the liquidity, broke structure, but before breaking structure, maybe let's say, there was some sort of broke structure, it returned, then sold off. Now, whenever the market was in an uptrend, it took out at least this significant high. What was residing above this short-term high? Liquidity. So it was taken out. After being taken out, there was this short-term low. So the market broke this short-term low at this particular point, BMS. So whenever the market broke the short-term low, whenever the short-term low was broken, it signaled that indeed, sellers are stepping into the marketplace. But the market took out, gave an inducement, this particular high. Then what happened? It reached to a significant order block or supply level, whereby it decided to sell off. Now, the high that was created after liquidity was taken out and that initiated the break of structure is the strong high. So this one will be our strong high. This will be our strong high. And the low that was created, now this low, will be our weak low. Now, why is it called strong high and weak low? Most of the times you don't see price, most of the times price is not supposed to trade above this high. This is the weak low of which there is some sort of liquidity. So anything weak, at least to anticipate on price to trade below it, because we had some sort of significant shift in structure, break in structure, the market signal potential, selling opportunity is stepping in the marketplace. Now the high that was created as a result of liquidity being taken out, because the liquidity being taken out was as a result of a breaker block that was residing maybe at this particular place, of which we saw some sort of reaction, then sold off. But at least you must have an inducement for you to take the trade. After being induced, check on the order block that is residing either in this short-term high. It can either be short-term high or even equal highs. So wait for it to be taken out, then target the supply level or logical area in which you should be tagged in the sell side of it. So the high that was created as a result of this liquidity being taken out and the break in structure is our strong high. And the weak low that the market now will be targeting is a weak low, whereby liquidity is residing and the structure has also shifted to the downside, so it will be breaking lows continuously. So this is our strong high, this is our weak low, whereby if you solve for this from this particular level, you are anticipating to offset your positions maybe in this low. If the structure is good, you can also go for these lows. So most of the times don't see price trade above this strong high. Now for strong low and weak high, strong low and weak high. Now the market was trending to the downside, whereby it took out the liquidity and this short-term high was taken out. So the low that was formed as a result of liquidity being taken out, the last step before this liquidity was taken out, and the one that initiated the break-in structure is what we consider our strong low. Now, the weak high now will be formed after the strong low has been created, because the market will target our weak high. Why? The market has showed a willingness now to continue to the upside because it has been breaking structures to the upside. So it will be targeting the weak high. The weak high is always formed after strong low has been created. Same case, strong high is always formed after, or the weak low is always formed after the strong high has been created. So the market gave us an inducement can be formed in form of short-term low, or rather equal lows. Wait for it to be taken so that you can enter into logical positions when the market is telling you to take your buys. Now a lot of you are wondering why strong low, strong high, or strong high, weak low, and the strong low, weak high. Now basically these are the ones that helps me to frame at least my entries, to be on a safer side. Don't enter anyhow in a trade. This one alone will help you to enter your trades in a logical manner and in logical positions. Now again, this is the strong high, this is the weak low. Weak low is always formed after the strong high has been created. The strong high is always formed after the liquidity has been taken out, and it is the one that sponsored the move to take out to break this structure. So how do you enter? Just wait for this short-term high to be taken out. Look for logical area that price is signaling that selling opportunity will step in the marketplace after this liquidity has been taken. Enter your sales. Stop loss can be above this short-term high temporarily, or any zone if you want to refine your entries, significant supply or order block. Then take your sales, ride the move. The market will be targeting now the weak low because the structure has been breaking significantly to the downside. Same case, this is the strong low, weak high. Strong low is the last step that was created after this liquidity was taken out, and at least to confirm it, there must be a significant break in structure. Why? It signals that indeed buyers are stepping in the marketplace. So how do you enter? Wait for a short-term low to be taken out or equal lows to be taken out. Dive into a logical area where demand is, or the order block for bullish. Take your buys. So let us see examples in the chart. Now, look at this example. We had this liquidity being taken out. Now, in as much as it is strong high, weak low, and strong low, weak high, structure is very, very key whenever you're trying to tackle this scenario. Now, look at this. There's liquidity that was residing below the short-term low, and it was taken out. So after the market took out the liquidity, our main concentration is this low now. It is our strong low. And near this low, you don't anticipate to be taken out, but instead we'll be looking for logical point of interest that the market could potentially buy from. But for us to confirm that this is a strong low, there must be a break-in structure, and it was broken at this particular level. So how do you anticipate to buy? I told you, just wait for inducement. This low was taken out. And where did the market dive? Into this order block. So depending on this risk parameters, at least whatever you're trying to risk. So this one is our strong low. This one will be our weak high. Strong low. Now use the call out. The call out. Strong low. This one will be our weak high now, because after inducement this was the last high that was created. So this will help you to enter, not picking any order block that you're not sure about. So weak high. So depending on the context, then we got an inducement from this particular level. So first of all, this short-term low was taken out, but we've not confirmed this one as a strong low, because maybe the market could have reversed from this supply level. But what did we wait for? At least a significant break in structure. Now at least it confirms this one as a strong low. Initial weak high was this one, but how the market dwindled at this particular level before inducement to this logical order block, this one now will be our weak high. So we waited an inducement into this order block, you buy. Your first objective could be this particular weak high, because most of the times the market will target it. So you could potentially, depending on structure, hold, but at least this one should mark your first objective, this gold 1 hour time frame. So this is our strong low. After break of structure, we confirmed strong low, then this one our weak high. An inducement, at least wait for inducement before you take your buys. So let us check for another example. Let us look for another example. Initially, in as much as it didn't hold, but at least it gave us some sort of reaction. The good thing is that it will give you reaction. Liquidity was taken out at this particular level. Then the market broke this structure. After breaking the structure, what did it do? At least it gave an inducement at this particular level. Then it sold. In as much as it didn't hold, but at least you could have bagged something. So this one bought because structure is very, very key. We didn't confirm the reversal yet. So potentially it was a strong high, in as much as initial level you could have bagged something. This one is our weak low, in as much as it didn't go through it, but later on the market purged heavily. Weak low. So inducement into logical area to take your sales from. Another example, we have this one as a strong high. Look at this, and this trade we took, strong low rather, sorry. Liquidity was taken out. It broke structure, short-term high, this particular level. Then you wait, it induced, gave an inducement. You can check on the 30 minutes. Check on the 30 minutes so that you can be able to see it better. So it took out this low, liquidity, broke structure, induced, give an inducement rather, this particular level. Then you buy. It was, if you check on the 15 minutes, there was something residing here, or rather even 30 minutes reclaimed block, because the 15 minutes is very clear. So this was the strong low. So it's not a must for you to write it or to note everything down on your charts, at least to make it clean. Just use your eyes and spot weak high now. So after an inducement, you enter your buys. Your first target could this place, and this equal highs the liquidity that is residing in that area. Another example. We have this example. Look at it. The market took out the liquidity above the short-term high. Then at least for you to confirm this is a strong high, you must wait for breakout structure. So we had breakout structure. So it confirms this is our strong high. Strong high. Now what will be our weak low? This one. It is formed as a result of the strong high. So this is our weak low. Just be patient. These setups will be many. Weak high. How do we enter? After what? Inducement. Near our strong high. The logical area of supply or order block. So this is our supply. Inducement to cut the short-term high. So ladies and gentlemen, try to backtest. So this is why I always sing of don't enter and trade without inducement, but at least it should be in a logical area. If you want to sell near a strong high, because most of the times this high is very hard for the market to take it out. If you want to buy near a strong low. So go through this video multiple times, go through it and try to backtest. It works. That's where and how we always utilize our entry pattern. So hopefully let us assume that I'll not be forced to pull down this video just like the others. Go through it, strive to check on the description so that you can enter our Telegram community and also follow us on our Instagram page. So ladies and gentlemen, have a lovely day.